Tune into Leaders of Tomorrow tonight at 10:30 p.m. only on ET Now. So we move on, and next on the Money Show, let's talk about senior citizens. With the start of the income tax filing season, focus is on tax saving strategies for individuals. However, if there's one age group which is not completely aware about tax saving strategies, it is senior citizens. And so on the Money Show today, we will discuss how senior citizens can save tax and avail special benefits provided to them under the Income Tax Act. Let's welcome on board Parizad Sirwalla Partner Tax, National Leader, Global Mobility Services, KPMG. Parizad, good evening and welcome to the Money Show, where we will talk about tax saving avenues when it comes to financial investments for senior citizens, and also your do's and don'ts, or your guidelines to senior citizens when they are filing their income tax return. Okay, so let's divide this entire discussion in three parts. The first question to you is the most attractive investment instrument options available for senior citizens.
Fine. Good evening, Kavita, and thank you for having me here. First of all, from an income tax perspective, a senior citizen is defined as a resident individual who is 60 years or more of age. And there's also a category of a super senior citizen who has crossed the threshold age limit of 80 years and above. To your specific question around what are some of the tax saving instruments or exemptions or deductions that are permissible, particularly for this category of individuals, some of them are something like a senior citizen savings scheme, which is called an SCSS, and it's potentially offering a regular stream of income for senior citizens. It carries with it certain tax savings benefits as well. First of all, as a senior citizen, you can invest maximum up to 30 lakhs of rupees in this senior citizen savings scheme. Earlier, the threshold limit was 15 lakhs of investment, which was subsequently enhanced to 30 lakhs from 1st April 2023. This is one of the eligible investments which qualifies for deduction under Section 80C of the Income Tax Act, which is otherwise a bundle limit of up to 1.5 lakh per annum that you get as deductions. This qualifies as one more eligible investment to claim that tax deduction. The interest that you earn generally on the senior citizen savings scheme is roughly annually to the tune of 8%. This interest would be taxable. Then, of course, you have the other common investment avenues, which, considering senior citizens and their risk appetite, they would generally look at fixed deposits with banks. And again, for fixed deposits which are for 5 years or more, they would again be eligible as one more investment, which qualifies under this bracket of Section 80C. Again, the deduction for tax is to the tune of 1.5 lakh per annum. Over and above that, the common avenues of post office time deposits or any other life insurance premiums that may be paid, they may be paying, or public provident fund, all this falls under the 80C bracket of 1.5 lakh. If they happen to, of course, earn interest element or interest income on these fixed deposits or any other savings bank interest, there is a tax deduction threshold of 50,000 rupees per annum, which also should be available to them from a tax deduction perspective. And of course, as we progress further into our discussion, maybe we can talk about some of the health and medical related insurance deductions that are also available.
Yeah, I think we should do that, Parizad, because we are talking about tax saving and tax exemption strategies that they might want to adopt. So the investment part is taken care of, but then yes, a lot of tax exemptions and benefits are there when you take health insurance for yourself also. So what's the process there and what's the availability there?
Right. So all these tax deductions come under, without getting too, technical jargon about it, come under Section 80 or Chapter 6A deductions as they are known in the Income Tax Act. But from a senior citizen perspective in this age bracket, you would be very concerned from a health or a medical insurance perspective. And if you have, taken a health insurance policy, or even otherwise, if you're a resident individual who's a senior citizen and you have medical expenses, then under Section 80D of the Income Tax Act, again, the threshold annually is 50,000 rupees for claiming deduction for any such medical expenses or health insurance premiums paid. There is also another section called 80DDB. So if you have unfortunately plagued with certain prescribed medical ailments, which are again coded in the Income Tax Act and the rules, and severe terminal ailments, just to enumerate a few, like terminal illnesses or neurological ailments, whatever is specified, then you can claim, and you're actually incurring massive medical expenditure either for yourself or for your dependent, then there is an amount of up to 1 lakh per annum, which you should be eligible in the unfortunate event, if you are in that situation, from a tax perspective at least, of up to around 1 lakh. And we've already spoken about the interest, which qualifies under Section 80 TTB, but that amount is again 50,000. So all your interest income under savings bank, fixed deposits, term deposits, post office deposits, cumulatively up to 50,000, a senior citizen is what should be eligible to avail those exemptions as well.
All right.
Of course.
Sure.
Sorry,
Yeah, you were saying something.
I was just going to add one more point, that, of course, now with this old tax regime and new tax regime, every individual, including senior citizen,
exactly. So that was my question to you, that all these benefits are as per the old tax regime and not the new tax regime. So nothing comes, no tax benefits and exemptions for senior citizens also in the new tax regime, right, Parizad?
Yes, absolutely. But I would roughly look at it on average at that time of your life, depending on the thresholds of income. So there are, so under the new regime, of course, you don't get any of those deductions. But more or less, if you're in the on an average in the income bracket of 5 to 7 lakhs per annum, and each individual case is different, but due to the threshold minimum amount not chargeable to tax, either under the old regime of 3 lakhs for senior citizens or 5 lakhs for super senior citizens, and then with rebates available both under the old and the new regime, which goes up to 7 lakhs of rupees. Roughly, if you're in that income bracket annually of 5 to 7 lakhs, of course, one has to do the calculation and the specifics, but in that income bracket, honestly, both the regimes become more or less neutral to you. But of course, if you are, blessed enough to have higher income, even if as a senior citizen, depending on your individual facts and circumstances, then like every individual taxpayer, even a senior citizen would have to actually work out the mathematics to see what exactly is beneficial, the old regime with all its list of deductions that we discussed, or the new regime with the higher slabs and lower tax rates. One has to really work out the ethic therein.
All right. Now, let's talk about the ITR filing. What are the do's and don'ts that one needs to keep in mind of this age group?
So first of all, any individual taxpayer, including a senior citizen, has to first ascertain whether he or she does have taxable income. But assuming that analysis is already done, there is a specific carve-out for senior citizens in the form of a exemption or a section which permits senior citizens from not filing income tax returns. Just to be specific, it's 194P of the Income Tax Act. But there are certain conditions that if you're a senior citizen about 75 years of age, you have to be a resident senior citizen. And let's, assume that you have only pension income or interest income, that too that you receive from one particular bank, then they have, you can be exempt from filing your income tax return only in this specific situation, because then the bank has to be a specified bank and they will, take care of the appropriate tax deduction at source. But if you are not falling within this specific category, let's say you're a senior citizen who's less than 75 years of age, and if you have taxable income as an example, then you have to go through the normal ITR filing process. And as you mentioned, we are at that time of the year where the deadline is largely July 31st, And once you establish that, I'm guessing most of the senior citizens would have simpler streams of income. So ITR 1, which would be the relatively simpler form, would apply to majority of the resident senior citizens. But again, there are different income tax forms for income tax filing. ITR 1 applies only to residents of India, provided you have only, income from other sources, no capital gains, only one house property, no foreign assets, so on and so forth. It's a simplistic form. If you do happen to have business income or any other income, still you have capital gains even at this age, then there are other forms that you need to be aware of. But I'm just putting it very simplistically, depending on the situation of your income and the streams of income, there are different forms specified. You really have to assess which form you fall into the category. And then, of course, that's how it works.
All right. I think in a nutshell, you've covered everything. Thank you so much, Parizad, for being on the show today and talking on this topic to our viewers. Thank you so much.
Thank you for having me. Thank you.
All right.